Welcome, everyone. Today, we're diving into a topic that is getting a lot of investors' attention, the resurgence of gold. And with me to discuss this is Jared Lazerson, the CEO of North Bay Resources. We're going to get some insight into how North Bay is positioning itself in the market and what sets itself apart in the new gold rush. So, Jared, let's start with the macro trend. I mean, we see headlines every day on gold. It's right through my Instagram. Like, what is happening right now that is causing this kind of attention and attraction and prices?
Well, right now you're really seeing acceleration in momentum. So, as we stand today, momentum is kind of carrying the day. There's been accelerating momentum and move to gold, which is a traditional safe haven asset. What got things going, and these themes appear to be continuing, which is a move away from, or I wouldn't necessarily say away from, but a diversification away from U.S. dollar and treasuries as the primary safe haven asset. So diversification, U.S. Treasuries tended to be the only real safe haven asset. And now gold, for many decades, really centuries, gold was the primary safe haven asset. In fact, the U.S. dollar was tied to the price of gold, pegged to the price of gold up until the early 70s. So this isn't really a new trend in terms of long term, but in the relative short term, there's just been a return to this safe haven asset. Obviously, geopolitical factors have really the chaos in the world lends to just a trend towards safe haven assets, but really a diversification into something other than U.S. Treasuries as your primary safe haven asset is really moving things along. And like I said, you're now in a phase where you're hitting regular new all-time highs, which now you're into kind of a momentum phase. It took a while for it to get going, but price of gold is just very, very strong right now for a variety of reasons, all which do not appear to be moderating significantly.
So, with that, people are calling this the new gold rush, and so what does that mean to you, and how is North Bay positioning itself to take advantage of this new gold rush?
Sure. Well, the key to any mining company, whatever shape or form you're in, is really starts with the mine. So the first really asset or the cornerstone of North Bay is that we're involved with a mining project, the Fran Gold Project, up in British Columbia. It's very close to Centerra's Mount Milligan project, as well, fairly close to a brand new gold mine, which just opened called Blackwater. Kind of in between those two, very close to Mount Milligan, almost contiguous walking distance. So this project, obviously near very large projects, and those are hundreds of millions of tons. But this project I've been involved with for the better part of 20 years. It has had about 20 million spent on exploration. We were able to joint venture it. Again, I was already involved with the project, so we brought North Bay in to the project. North Bay is now the operator. And there's been 55,000 feet of drilling done in 104 holes. In addition, there's about 5,000 tons in stockpile, which we're using as feedstock to ramp up our mill, which I'll talk about in a second. But again, really, the cornerstone to many mining company is the deposit. So we've got a very good deposit. It's largely drilled out. There's a lot more potential there, but we've now organized it. We're now looking at the deposit and doing a resource estimate. There's never been a resource estimate done. There was a lot of focus in the past on the high grade veins. But in reanalyzing the data over the last month or so, I just really began to see there's a lot of gold in between the high grade veins. And especially with the price of gold where it is now, this type of bulk tonnage, disseminated gold deposit combined with the high grade veins is really how you end up finding the millions of ounces. So we're working on modeling that and should have a resource estimate out fairly quickly. Just to kind of refocus on the short term, which is that this potentially large deposit also is acting as feedstock for our mill, which is really the second piece of North Bay.
So yeah, North Bay has a mill, and this is like vertical integration, kind of owning the supply chain, as some would say. Why does this give you such a strategic advantage?
Well, it's very traditional. Mining is a traditional business, and to really understand cash flow, becomes key. There's been a lot of difficulty in the exploration market in the last 5 years, in that the explorers, which is really ultimately where I come from, the explorers have to continually need to raise money, and ultimately dilute their stock and their shares in order to pay for exploration, which is also very expensive and very risky. So we built North Bay on a bit of a different model, which is a cash flow model. One of the first things we did was acquire a mill in California, fully permitted, and never really operated. So there was no legacy tailings or all the kind of problems that generally come with and liability that come with a mill. It's a ways from the mine in British Columbia, but with the price of gold where it is, a couple of $100 per ton in shipping cost is really nominal to the whole equation. And we've been successfully shipping. So we did a over 100-ton shipment in January, and been processing. So the ramp up and optimization at the mill has happened. We just did our first major concentrate shipment. These are still test shipments, but this is really the result of optimization. It's been a little slower than we'd hoped. Get everything up and running, primarily because the assay turnaround time is a couple of weeks. So we optimize, we run some tonnage through the mill, and then we need to send it for assay. So everything kind of takes generally, twice as long as we'd hope, but that's happened over the last 3 months or so. Like I said, I think we've got everything dialed in here, and we just made a approximately 500-pound shipment last week. We'll have the assays on that from the refinery and from our independent assay lab, and that will both give us some cash flow, which is nice. But if everything I guess works out with that in terms of the grades and recovery, which we already have had because we've done a prior shipment, then we'll just start cranking it up. So really our competitive advantage is, I don't know, I say near-term cash flow. We're in cash flow, and really now it's just a ramping up to some significant volume. I just add the mill is permitted for 96 tons per day. So some basic metrics. We're getting a head grade around 0.34 ounces per ton, times a gold price north of $3,000. So our per ton value is above $1,000 per ton. Shipping costs from the mine and loading cost is just over $200. Milling cost, all in milling costs, around another $50 to $100. So we're in the $300 cost range. The value of the gold really around probably $1,100 per ton, $300 cost per ton. So a lot of room for profit. Again, a lot of it has to do with the price of gold. And then we're not quite there yet, but our ramp up is to 100 tons per day. So if you say $1,000 gross revenue times 100 tons, that's $100,000 per day, and a profit around $60,000 per day. So our focus is just very clear. Our competitive advantage is this near-term cash flow, and we have 5,000 tons in stockpile ready to ship, as well as obviously ramping up the mine itself, which has just from the surface oxide material has decades of material at the 100-ton per day capacity of the mill.
Fantastic. Well, congratulations on meeting so many milestones and on revenue, because I know just from seeing so much in the market, that's such a rare occurrence. So that's a huge achievement. Now, zooming back out again, like, what do you think, like, as you're going into production, as the volumes are increasing for your business, what are you seeing for the gold market? What do you think, what are some of your expectations of what the next year looks like?
Well, I'll tell you, it's I don't think anybody really, if you asked anybody even a year ago, certainly 18 months ago, that if we'd see $3,500 gold, I think nobody would have predicted that. But again, there is now momentum. The global trends don't seem to be that things continue to really accelerate in terms of just the speed and the general instability in the world. So again, safe haven assets, and really looking for these safe haven assets, alternative to U.S. Treasuries. These themes seem to be actually accelerating, which I didn't expect. So I prefer not to speculate on the price of gold. But at these levels, which it doesn't seem it's going to abate, obviously at higher levels we do better. It's just pure profit for us. Our costs are fixed. Energy costs, actually, if you look at the price of oil, have gone down. So the traditional inflationary pressures, which usually are combined with increased revenue, don't really exist at this time. So actually, you kind of have moderate energy costs, labor costs combined with very high gold prices. So I think those themes will maintain, and that really feeds into an opportunity with North Bay, which is that our market cap right now is $5 million. We're publicly traded, so we have a large shareholder base, and I think that I'd rather not speculate on what the company could be worth or even is worth at fair value. But clearly, with this type of revenue and ramp up towards substantial revenue, and then potentially expansion from there, I think there's a real opportunity for investors at this valuation. I think there's a tremendous amount of room to run in terms of a market cap. Again, I'd rather not speculate on what that is. But $5 million, considering a potentially just very large gold asset right next to Mount Milligan in the Fran deposit itself as a standalone, let alone cash flow, a permitted mill, and we're actually producing now. So I think I think the company is very unique in that, like you said, this doesn't happen very often. We are the only fourth producing mill in the state of California. And there's just not that many other juniors or small producers coming online. It's surprising. It's surprising to me. Usually at this price of gold, you'd have hundreds of small mines moving into production, and we get calls every day from small mines and ownership that would like to work with us. And really, our competitive advantage is having that permitted mill. And with cash flow, obviously, we can look at additional milling facilities, engineering studies, acquisitions. But right now, we're just very linear. It's a very simple story, and it's a story that is no longer a small story. We're growing, and like with the price of gold, we've really got some momentum right now.
Well, thank you, Jared. And for all those watching, you can learn more about North Bay Resources at northbayresources.com. And please stay tuned for our next update. And thank you so much for joining us today.
Thank you, everyone. If you have any questions about what we covered or want to discuss any opportunity, don't hesitate to reach out. Visit https northbayresources.com, call +1 31058 47278. Email info@northbayresources.com. We're here to help clarify or dive deeper into any details. Thank you.